It's Brian Preston, the money guy.
Disability insurance. I want to give some scary statistics. Now, I realize I pulled these stats from an insurance company, so they want you to buy insurance, but it's still I believe these numbers. A 35-year-old has a 50% chance of becoming disabled for a 90-day period or longer before the age of 65. That's kind of scary.
Hold on, so I want to read that. I want to read that back to you in a different way to make sure I get this. 1 in 2 35-year-olds will be disabled for 3 months
Or longer
between now and the time they get to retirement.
Yeah.
I mean, that's kind of an alarming thing to think about because, so that hits home.
Here's another one. 1 in 7 people between 35 to 65 can expect to become disabled for 5 years or longer. Now, remember, the last stat was 90 days
right.
or longer. This is 5 years or longer. So this is an extended disability.
Sure.
That number is 1 in 7. That's still, I mean, I like it when my numbers are 1 in 2,000.
Yeah.
You know, because then you're turning them into very minuscule percentages. But 1 in 7 is a pretty good number. And then I thought this one was interesting too. 46% of all foreclosures on conventional mortgages are caused by disability.
So almost half.
Yeah, and you hear that. You know, a lot of medical expenses derail people and they lose everything. So this is definitely, you know, and I know it's marketed in a way that you're more likely to be disabled than you are to die. Now, I think when you hear that, I'm like, well, wait a minute, we're all dying.
We're all
on that path towards death. But I think it just means that probably prematurely, you're much more likely to become disabled while you're in your earning working years than you are to die.
And would you agree in terms of personal insurance, you know, what we do when we work with clients and when we see folks come to us, this is the one we see the most often neglected. People just don't think about it and don't really try to make sure they're covered there.
So let's talk about, since we've realized that there's probably a need that you ought to look at for your family, how much coverage should you have?
And what does disability insurance do?
Yeah, what disability does is if you become, you know, and it doesn't have to be a long-term disability. It could just mean that you've become injured, and you need to replace income for a period of time to replace your income that you were earning. And here's the cool thing about disability insurance is that there's some tax benefits out there. The government has created the system to where they recognize there's a need, so they've made some tax-favored rules that you need to make sure you're aware of. So let's kind of jump in this. Bo, what are your thoughts on how much disability insurance you should buy?
Well, a really good rule of thumb that we like to talk about is you want to try to replace somewhere around 60% of your normal income. Because what happens if you're disabled, you're probably not going to the movies as much, you're probably not going out to dinner as much, your expenses and lifestyle probably come down a little bit. And based on the tax situation we're going to talk about in a second, 60% of your current income without having to pay taxes may be pretty close to what you're spending now anyways.
So you just heard Bo give away the next clue, which is how do you wipe away your tax obligation? And here's the cool thing that's set up by the government and the tax codes is that if you pay your disability premiums, you know, the premiums to get the insurance with what's called after-tax money, meaning that you're not getting a tax deduction as you do it. So that's why I always tell people when you get offered disability insurance through your employer, make sure that it is after-tax money that you're not taking a tax deduction when you pay your premium.
I feel like that was something important that bears repeating. If you are someone who pays for your disability insurance through your employer, you have it withheld from your paycheck, make sure you ask the question, hey, am I paying with this pre-tax dollars or post-tax dollars? Because the answer to that question matters.
Yeah, because if it's post-tax dollars, meaning you're not getting a tax deduction when you make the premium payment, it means if you ever have a qualifying event where you get to take the benefit, it's all completely tax-free. That's right, completely tax-free. So if you're getting paid $5,000 a month from your disability insurance company, it would be completely tax-free. And that's what Bo was saying. So that could be $60,000 a year, which could easily, if you take into account taxes and other things, could potentially cover $100,000 worth of income. So that's why the 60% is because there's a huge, tremendous tax benefit if you ever have that issue. And disability insurance is not so expensive that look, we all want tax deductions as much as possible, but this is one where I'm going to tell you to forego the tax deduction so you can get that potential tax-free benefit when you need it the most if you had a disability.
Sure.
But one of the things that we hear people ask all the time is you can buy just a general disability, but then there's also own OC.
Yeah.
What does that mean?
Yeah, so there are two different definitions when it comes to disability insurance. There's own occupation, which means you're insuring against you being able to do the job that you're trained to do. And then there's any occupation disability, meaning that you just can't work at all. And I remember when I was in school, one of the examples they always gave us is there was a group of attorneys in California that there was some sort of injury that happened and they weren't able to practice law. Well, their disability claim got denied because they told them, oh, well, you could go be a teacher or you could go get a job doing this. Well, they were making hundreds of thousands of dollars being attorneys, and they were told, oh, you can go make $50,000, you can still work, so we're going to deny the disability claim.
Right.
So if you're someone who really anyone, but specifically if you're someone that's a higher earning individual in a specialized industry, which means what you do is very unique, you want to make sure that you have own OC definition on your disability insurance.
And that's not to say you couldn't have a combination where you get some because own OC, as you can imagine, is more expensive. So you probably want to have some baseline protection through that with that type of language in the policy. And then you maybe want to add a little bit more in case you have a total disability where you couldn't do any job.
Sure.
So you could have a combination of multiple disability policies on that. Elimination period and benefit period. I thought this was an interesting statistic because this will also help give some guidance on this is average group long-term disability claims last 34.6 months, so a little less than 3 years. And then the average individual disability claim lasts 31.6 months. So if you're trying to figure out, because what I mean by elimination period is how fast can you apply for benefits?
Okay.
You know, on disability policies, it's not uncommon to see 60 days, 90 days, but you can go even further, 120. You can go out with disability. So I would ask you, because realize the bigger your elimination period, obviously the lower the premium. So think about your cash reserves, think about how fluid you are, liquid you are with your money, and that can help you determine what elimination period you need. And then benefit period, that's why I gave you those stats is you're probably going to want at a minimum 3 to 5 years worth of protection for just to stay within those averages. Obviously, the longer you go with your benefit period, the higher the premiums are going to be.
Perfect. And Brian, I know that, does it make sense? Because I know if I work for an employer who offers disability insurance, I can buy disability insurance to the employer, but are there ever circumstances where I should have this insurance outside of my employer, or should I go look elsewhere when it comes to shopping for disability insurance?
Well, of course, if your employer offers you and provides disability insurance, which a lot of employers do, take advantage of that. But you probably, it's more individualized, and we can't give completely individualized, obviously, on this show, but we can say, go look at your needs might be bigger than what the group plan could offer you. So that's where you want to subsidize it by getting your own plans. And then also there's the portability factor. Unfortunately in today's society, we change jobs much more frequently than we once did. And so you might not be able to take that group plan. Now you can, in a lot of cases they are portable, but just make sure you understand the portability factor. And that's why sometimes, especially if you're healthier, if you're a healthier individual versus the group you look at all your coworkers and you go, man, we got a lot of people here that I think I'm healthier. It's okay to buy individual policies. I should have extended that to the life insurance too, because you'll get offered group life insurance versus individual. If you're a healthy person, buy an individual policy. If you're an unhealthy person with unhealthy habits, buy the group policy so you can get some subsidy by your coworkers who don't realize that they should be buying individual plans.
And this is my last question on disability. I know we got to run. I know we got to get through this. Does everybody need disability insurance? I mean, we said with life insurance, there's a lot, if you're someone who has an insurable need and someone's depending on you or there's a role you play in the household, does everyone need disability insurance?
I think it goes exactly back to the life insurance. There will come a point in your life where you don't need disability, but it all is based upon who's counting on your income. If you haven't fulfilled all of your financial obligations by building financial independence and retirement, that army of dollar bills isn't built up. I think you need disability coverage. If you're gainfully employed and working and that's what's paying the bills, you need it. Now, if you have outside sources and nobody's counting on you to earn the money, because maybe you have, passive income and other things coming in, it can quickly replace that.
Okay.